Have you ever wondered what connects to your smartphone, solar panels, and even your grandma's antique teapot? It's silver. This precious metal is more than just jewelry. It's a critical component in our modern world, an industrial powerhouse, and a historic store of value. But right now, the silver market is sending out signals that have analysts and investors on the edge of their seats. Something big might be brewing. And today, we were going to dive deep into what these signals are, and what they could mean for the global economy and for your own financial future. For years, silver has been called gold's poor cousin, often overshadowed by its more glamorous counterpart. But that's a huge misconception. While gold is primarily a monetary metal, sitting in vaults, silver has a dual personality. It's both a precious metal and a vital industrial commodity. Think about it. Every time you use an electronic device, you're interacting with silver. The green energy revolution, with its massive demand for solar panels and electric vehicles, is heavily dependent on silver. This industrial demand is non-negotiable, and it's growing at an incredible pace. So, what's the dangerous signal we're talking about? It's a massive and growing supply and demand imbalance. For the past few years, the world has been using far more silver than it's been producing. We're talking about a deficit of hundreds of millions of ounces. According to major industry reports, this isn't just a one-off event. It's a structural trend. Last year saw one of the largest silver deficits ever recorded, and this year is on track to be just as tight, if not tighter. Now, you might be thinking, if there's such a shortage, why isn't the price of silver skyrocketing? That's the billion-dollar question, and the answer is complex. A big part of it lies in the paper market. You see, for every ounce of physical silver that exists, there are hundreds of ounces traded in the form of futures contracts, ETFs, and other derivatives. This paper market has, for a long time, suppressed the price, creating a disconnect between the price on your screen and the reality on the ground for physical metal. But this disconnect can't last forever. The physical market is showing signs of extreme stress. We're seeing major bullion dealers report delays and low inventory. The premiums you pay over the spot price for physical coins and bars have been stubbornly high. This tells you that getting your hands on actual physical silver is becoming harder and more expensive. The inventories in major commodity exchanges like the COMEX and the London Bullion Market Association, which are supposed to backstop the entire system, have been steadily draining for months. We are talking about a massive outflow of physical metal from the very vaults that are meant to guarantee the integrity of the paper market. This is where the signal turns dangerous. What happens when a big player, a large fund, or even a sovereign nation, decides they want to take delivery of their physical silver, but the vaults are running low? That's a scenario known as a default or a force majeure. It could trigger a panic, a mad scramble for the remaining physical supply. The paper price, which has been artificially held down, could suddenly snap back to reality, causing an explosive move upwards. This isn't just speculation, it's a potential reality based on the current inventory data. The system is being stretched to its breaking point. Let's consider the demand side more closely. The push for green energy is a juggernaut. Every new solar panel installed contains silver. Every new electric vehicle has silver in its components. Governments around the world are mandating a transition to green tech, which means the industrial demand for silver is essentially legislated to increase for years to come. This isn't a cyclical trend that will fade away. It's a long-term, structural increase in demand. On top of that, you have the burgeoning 5G network rollout and the ever-growing consumer electronics market. All of them need silver. Now, what about the supply side? Can't the miners just dig up more? It's not that simple. Over 70% of silver is mined as a byproduct of other metals like lead, zinc, and copper. This means silver production is often dependent on the economics of mining those other metals, not on the price of silver itself. Furthermore, discovering and developing new primary silver mines is a long, expensive, and politically risky process. It can take a decade or more to bring a new mine online. The pipeline of new projects is thin, and existing mines are facing declining or grades. So, we have soaring demand hitting a wall of inelastic and potentially shrinking supply. This creates the perfect storm, a structural deficit, draining inventories, and an inelastic supply chain. The danger isn't just that the price of silver could go up. The danger is a disorderly reset. If the paper market loses credibility, the shockwaves could extend far beyond just silver investors. It could cause a crisis of confidence in the entire commodities market. Companies that rely on silver for their products could face crippling shortages and soaring costs, which would then be passed on to consumers in the form of higher prices for everything from electronics to green energy. So, what does this mean for you? Firstly, it's a wake-up call to pay attention to the physical realities of the markets, not just the paper prices you see on the news. The tension between the physical and paper markets for silver is a canary in the coal mine for broader market dislocations. It highlights how financial engineering can temporarily mask, but not eliminate, fundamental supply and demand issues. For investors, it presents both a risk and an opportunity. The risk is being caught on the wrong side of a major price reset. The opportunity is recognizing that silver is currently one of the most undervalued assets on the planet. When you look at the gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, it's still at historically high levels. This suggests that silver is incredibly cheap relative to gold. If that ratio were to return to its historical average, silver's price would have to increase dramatically, even if gold's price stayed the same. The signal from the silver market is a warning that the foundations of our commodity pricing systems are under strain. The relentless drain of physical metal from the world's most important vaults is not a drill. It's a slow-motion run on the bank, and when confidence finally breaks, the situation could escalate very quickly. This isn't just a story for precious metals enthusiasts. It's a story about industrial supply chains, the green energy transition, and the stability of our financial markets. The silver market is sending a clear, dangerous signal. The only question is, are we listening? Thanks for watching today. This is a complex topic, and we've only scratched the surface. If you found this information valuable, make sure to like this video and subscribe to the channel for more deep dives into the markets. Don't forget to hit the notification bell so you won't miss our next video. We'd love to hear your thoughts in the comments below. What do you think is going to happen with silver? Let us know. Stay informed, and we'll see you next time.